Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of December the 23rd, 2024. Now, to get started this week, we'll begin where we always do with that very important US dollar index. Now, what we can see here on a very confused Fed suggesting he's not going to cut as much as what he's saying now in 2025. I don't believe that to be accurate. We can see on Wednesday we've had a big spike up to a known verified resistance high. That's coming in at 108.07. We've had a minor rise higher and then a failure on Friday back below that particular level. Now, when we look at our Vantage Point, again, our neural index strength did not support buying the dollar up at this particular area. We now have an MA diff cross. We've got a predicted RSI that is pointing straight down. Once again, the dollar is still very bullish on the year, but I think the markets have to assess whether the Fed's decision is the right one. So for now, it is pointing lower into year end. We can see that gold is starting to pick up steam again. Heavy support sitting down at the lows around 25.86. Once again, our neural index strength pointing straight up. We've got a buy signal now forming on that. I would like to see the pink line over the blue line here, but our short-term predicted difference is looking pretty good. The predicted RSI is starting to recover and move higher, but we've got to get back up above 26.50 in order for gold to remain bullish into the first part of 2025. Now, when we look at the S&P 500, again, fully trying to recover, not fully recovered, but trying to recover, stopping right on our T-cross long, 59.89. Again, we get over that area, we retake that monthly opening price, and we should move higher into year end. We've got, again, an MA diff cross forming, showing us that the medium-term weakness is starting to abate, and it's getting ready to likely move higher. But the key part is here, guys, as long as we know our levels, then we know where the problem area is, which is 59.89. So if we can clear that, then we should be able to extend higher into year end. Now, when we look closer at that with the European equity markets, they remain above their monthly opening price. The European equity markets, based on the ECB, a number of other fundamental factors, remains fairly strong. So again, we're looking for that pink line to start turning back up. The neural index strength does look pretty decent here, but not as strong as the S&P. But if that S&P 500 does start extending higher, it will pull the DAX and the other global indices up with it. As we saw when the Fed spoke on Wednesday, globally, the equity markets dropped, but they're likely to recover because, again, in my respectful opinion only, this is a very confused Fed. Looking at the unemployment numbers, the CPI data is basically flatlined for 3 months. So I'm not really sure where he's getting his decision from, but that's a whole nother argument. So right now, the DAX should extend higher. As we can see with the VIX, we had a big move up on the VIX, and it just gave it all back 2 days later here, guys. That's why we don't buy moves like that. We use the verified zones. I would need a close on the VIX above 21.49 for multiple days in a row. And as you can see, we got all, just like the dollar index, we got tangled up in this area up here, and then we've just completely flushed back out. So anybody buying into the VIX, selling the equity markets, is met with a pretty ugly trading day on Friday, and that is likely to continue for the VIX into year end. Now, Bitcoin also responding to that Fed, saying, "Okay, well, wait a minute, what is happening here?" And a little bit of profit taking. And in most years, that week, this previous week, is a very volatile week. But what we would look for here is basically buying Bitcoin, looking for an opportunity to buy it on a dip. So we can see that our quarterly opening price, 63,000. Not even in question, it's fine in that particular area, the quarterly opening, the yearly opening, but the monthly opening is the one we want to keep an eye on, 96,865. Again, in my respectful opinion only, following the patterns with Bitcoin. Whenever you have a year over the last 10 years or longer where Bitcoin was down 50% or more, there was 3 consecutive years of a rally. So 2025 is the last year of that 3-year cycle. So another strong year for Bitcoin is likely coming, but there is a pattern there, guys. That's the main thing. So right now, We just want to hold above that monthly opening at 96,865 is the area we'll use as a pivot point for next week. And then again, if we can get back up above that 100,000 psychological barrier, then we should see Bitcoin extend. And my only concern here is the medium and the long-term predicted differences breaking down below the zero line. So I would look for that to recover by potentially the latter part of next week. Now, with light sweet crude oil, we can see that light sweet crude oil once again is rebounded to some degree, but still not enough to really entice a lot of buying here. You can see that the calendar yearly opening price, as I discuss every week, it is very important that you're not moving your anchor points and that you're staying focused on the current monthly opening, the current yearly, quarterly, and weekly. These are very important levels because they're price based. So as you can see, when we've come up into the yearly opening price with oil, there's been sellers sitting there waiting, including me last week. So you can see it coming up to that yearly opening, 71.78. Now, if you're a buyer of oil, respectfully, I would put your buy limit orders above 71.77 because you need a clean break of this level, but that's very, very unlikely going into the end of 2024. So once again, be cautious with this because the predicted RSI is sitting at the 50 level. There isn't a lot of downside momentum either. So I suspect that oil will just remain flat into year end. Now, when we look at some of our main Forex pairs, again, Euro US will always be at the top of that list, the number one traded Forex pair. We've had a big push down here, guys, from that, again, a very confused Fed pushing this down, but then we have flatlined, and you can see that we're actually starting to rise back up as the market looks closer at the comments made by the Fed and saying, well, I don't think I really agree with what he's saying. So, and again, I suspect there will be some serious conflict between Powell and the incoming administration. So we can look at that low point here around 103.44 and create a base. We can mark that on our charts, put that on here, and you can see we didn't make any new low. And that other low, also, I might add, caused by the Fed, 103.34, there's buyers sitting there. So again, we'll use that level. As long as we can stay above that level into year end, then the euro can rebound. We do have an MA diff cross. The predicted RSI is rising. And again, the neural index turning green. Now, on a comparative currency pair, the US Swiss franc, then we can say, okay, well, right now, once again, a big push up on that fundamental of the Fed shocking the market to some degree with what they're calling a hawkish cut. And again, in my respectful opinion, I believe by March that this Fed will be looking at 50 basis points cuts because he will realize that he is behind the curve yet again. And this is a pattern with this guy. So again, right now, we would need, in order to buy this pair or buy US dollars, we would need to break higher than 90.21 and stay above that to confirm that bullish pattern in the dollar. And at the current time, respectfully, it's just not there. Vantage Point has told us that basically at the end of trading on Wednesday, we had an MA diff cross on Thursday, and then on Friday, we were pounded lower. So again, the T-cross long, 88.91, we're looking for a break of that level in order to see the dollar shorts accelerate. But that will be tough into year end and into the first quarter. Now, the British pound US dollar, once again, it's trying to make a rebound here. This is in familiar territory, the verified support low, 124.88. You can see that the bar is piling up along here, and then boom, on Friday, all of a sudden we get buyers coming in. So again, this is a corrective move higher. For now, we have the yearly opening price, 127.32. That's a very important level, and we have the VPT cross long at 126.58. So one could say, okay, well, I believe the dollar is going to weaken, and if that's the case, I would put buy limit orders above 127.32, and when it passes through there, you pick up your long trade. That's an alternative strategy because, again, this is an outlook here, guys, not a recap of something that's already taken place. We're looking at what is likely to happen next week, but I don't see a lot of fireworks at year end. Now, with the dollar yen, the market believes the carry trade is back on. because of what the Fed had said on Wednesday. But you can see that indecision up here around the verified resistance high. There's two of them sitting there, 156.75. I think it will be very difficult for this pair to remain above that level unless, again, I think that the Bank of Japan will have something to say about this. So be careful with this particular pair. If the market believes the carry trade, still believes the carry trade's coming to an end, then longs would be very, very dangerous up here. But I would look for a retracement back to the T-cross long, 153.53. But again, a very, very good year for the dollar, again, against the yen. But nothing lasts forever here, guys. And the second the Fed realizes he's making a mistake by not cutting, then you could see this pair drop very quickly on the interest rate differential between the US and the Federal Reserve and the Bank of Japan. And the indicators are directly warning us. You can see we have a very different signal between the neural index and the neural index strength. And that's what really shows the value of this indicator, is that in actual fact, the neural index and the strength neural index are not in agreement here. This is pointing straight down. We're starting to lose momentum on the predicted RSI, and we have an MA diff cross. Now, with the U.S.-Canadian pair, once again here, I think the the Canada potentially is going to be in an election here very soon. At the longest it would take, they're talking about calling Parliament back for a non-confidence vote. So the Canadian dollar is going to see some volatility. But again, I think that the short trade on this particular pair in 2025 will be very good once the current administration in Canada is gone. And that is a 99.8% probability at this point. There'll just be volatility around that. So again, we'll watch, I'll monitor this. As again, I'm domiciled here in Canada, but we'll look at 144.35 and say, okay, well, we'll put a bar up there for next week and say, okay, we need a clean break of this area. Because again, we've got tariff problems. The Prime Minister is out. There's no question about that now. A lot of volatility. So we could move higher before we move lower. But for the swing trader, there potentially is a very good short here midway through. End of the first quarter, start of the second quarter here in Canada. Now, the Aussie US and New Zealand US also feeling that pain from dollar strength in the Fed. But once again, excuse me, there's very, very little follow through here on this. I also believe these will be good trades, longs, Aussie and New Zealand in 2025 once we get past January, February, I should say, and the new administration in the U.S. comes in. We'll see how this plays out. But again, that neural index strength is pointing straight up. And it just triggered on the zero line, the neural index going green. But we've got to get above, at the very minimum, we've got to get through our long predicted 62.88 and then go back into our T-cross long. The Kiwi is the exact same trade virtually, guys. A little bit weaker than the Aussie. I think the Aussie is the better play on the long side here because of Aussie New Zealand. But again, no follow through off of that Wednesday bar. This is what you always want to look for, guys. If there's indecision around there, then either wait for a break of that particular low down at 56.20, but I think it's going to be very, very difficult for any further downside on this pair of any real significance. And if the global equity markets, the DAX, the Nikkei, the Dow, the S&P, NASDAQ, if all these turn around higher, that will boost the Aussie and the Kiwi and potentially even the CAD. But the main thing, what it should do is weaken that US dollar. So expect some volatility here, guys, next week. But remember, all liquidity is dried up in the markets. And really, we're already trying to lay the groundwork for 2025. So with that said, this is the Vantage Point AI Market Outlook for the week of December the 23rd, 2024.